So if I'm going to be an investor in one of these deals and I'm lending debt, right, which is presumably the safest, right? We've got a first position loan. What kind of rates and leverage are we talking? You mentioned that they were higher rates, but what about leverage as well, especially if the value of the asset is inflated from its normal highest and best use?
So if in my experience, I wouldn't lend more than 50% of the value of the property.
Which value?
I would
actually
think,
the cannabis-based
yeah,
value.
exactly.
Okay.
On the non-cannabis based value, quite frankly, and that is probably the cannabis-based value probably gives you a 30 to 40% increase in market value, at least in the optical view, because I think that those numbers are inflated. But there is the non-cannabis valuation and the cannabis valuation. What's interesting is I actually have one client right now that is Chinese American, and they have found that the properties that they use for their cannabis grow facilities also work for Chinese herbal medicine, which actually sells at about the same rate that cannabis sells for, if not more. So what they do is when they have a problem with one of their cannabis growers, they just bring in an herbal grower that grows these, that needs the same type of equipment and everything else. And they're the only ones that I've seen retain a non-cannabis business at a cannabis close to value in that regard.
That's really interesting.
Yeah, I would say this, if you're a lender, 50% is probably your threshold, maybe 60%. And I would try to base it on the non-cannabis value, but everything's negotiable, of course, right?
And what kind of rates? What kind of rate are you seeing? Yeah.
So 3 years ago, I was seeing 18, 20, 22%. Now I'm seeing 8 to 12% is more of the norm.